In this video, I'm going to demonstrate some of the basic concepts of the calculations for cost of goods manufactured and cost of goods sold using exercise 244 as an example. You may look at this problem and say, oh goodness, normally when asked on problems to calculate cost of goods manufactured and cost of goods sold, you're moving forward with the calculation. Here I've got holes in between. Don't worry. I would suggest either using the diagram in the book of cost of goods manufactured and cost of goods sold, or I include this diagram as a helpful PDF amongst my chapter 1 and 2 guide for you as an easy reference. Let's look at the different relationships included. My starting point for this may not be the same as your starting point, and that's perfectly fine. Don't worry. I'm going to start out and just calculate cost of goods sold. I'm going to look over here at my overall calculation and say, how did I come up with cost of goods sold? I took cost of goods manufactured and added that to beginning finished goods inventory. So what I started with that was finished plus what was transferred out of work in process as complete and transferred into finished goods. That's what I'd have available to sell. Well, I'm either going to sell it and it becomes part of cost of goods sold, or it's an ending inventory. So if I subtract ending inventory from that, I get cost of goods sold. I'm just going to plug in my numbers. My cost of goods manufactured is $260,000. My beginning finished goods for March 1st is $64,000. Add those together, then subtract out finished goods inventory March 31st, my ending inventory $14,000, and I get cost of goods sold is $310,000. You might have additionally spied another way to do that and said, I've got sales revenue here, I've got gross margin, and I know that sales revenue minus cost of goods sold equals gross margin. So if sales revenue is 180,000 and gross margin is 170,000, again, cost of goods sold must have been 310,000. That's another fair way to do this. Another item that I'm going to isolate here is purchases of direct materials. So again, I'm going to go over here to my diagram and say, how was purchases of direct materials, how was that involved in a calculation? Well, when I was trying to figure out what was moved out of raw material and put into production, I would take beginning inventory plus any purchases of material. So again, that's what I have available. I'm either going to use it in production or have it in ending inventory for direct materials. If I subtract out ending inventory for direct materials, I do get the material put into production. I'm not going to be as nice and do a giveaway for you, but just to start our formula out, again, beginning inventory for direct materials is 32,000 for March 1st. I don't know what purchases are. You can consider that to be our X. I'm going to subtract from that direct materials ending inventory on March 31st of 27,000, and that ultimately would give me direct material put into production, or they term it just a little bit different. They call it direct material use of 62,000. Again, solve for your X or solve for your purchases. Another item is manufacturing overhead. Again, not going to give you the final answer, but just kind of talk through this. Let's move over here and say, how does this relate to some of the other numbers that I might have? Well, if I know direct materials put into production, we already said that's 62,000. If I know total direct labor, I already know that that's 120,000. If I add to that manufacturing overhead, which is unknown at this point, it gives me total manufacturing cost incurred. Since I also know total manufacturing cost incurred of 254,000, again, I know three of the four things: direct material put into production, direct labor, and total manufacturing costs. I can back into manufacturing overhead. The last item here is going to be work in process, the ending balance of March 31st. Now, this is a little bit tougher only because the way that this is organized, they're a little bit spread, so my apologies. But ultimately, if I take beginning work in process inventory, which I'm given over here is 10,000, to that, if I add those total manufacturing costs incurred that I already used in the other calculation, which is 254,000, that gives me total work in process I have available. What I started with plus any manufacturing related costs that I added in. If I subtract from that my ending inventory, again, I don't know that, so that's going to be my X. I get cost of goods manufactured. Well, I know cost of goods manufactured. If I move over here, it's 260,000. So again, I know beginning inventory. I know manufacturing costs incurred. I know the ending calculation for cost of goods manufactured. I can back into the ending balance for work in process. So hopefully that gives you some helpful hints of how to get started with several of these calculations.